Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, July 5th. Hope you guys had a great safe 4th of July, and happy Friday, everybody. Hope you guys got some better plans coming this weekend here. Hopefully, you were able to make it a long weekend here. We do got some important data to come up with here on the economic calendar, and we'll start with the non-farm payrolls. This is the Bureau of Labor Statistics, or BLS's report that comes out once a month and gives us our job numbers. So if you recall, in May we had a really disappointing job numbers. It was actually reduced even further. It was at 75 and then reduced down to 72,000. The previous month was reduced another 8,000, so a total of 11,000 lower jobs were lowered due to revisions. However, on the forecast for this month, we figured it would be a little bit stronger at 170,000, and it came in at 224,000, so much higher than anticipation rate. However, on the unemployment rate for the month of June, we had a 3.6% in May. Forecast is calling for 3.6% in June, and it went up to 3.7. Now, this is primarily due to, because we had a larger influx of a labor force participants that came in. Labor force come in. We had about 335,000 people that joined the labor force in June, which is the reason why we had a slight uptick. So we're still pretty good there, but we just you got to factor in that we had a larger amount of people joining the labor force. Average hourly earnings still doing decent. We were up 0.3% in May. Forecast comes for the same amount, 0.3% in June. However, it came in just 0.2% in June. So let's jump ahead here, see how the headline news is. Stock market is down. So why is the stock market down? Excuse me, this is last Wednesday, so I forgot to take that up. Apologize about that. Stock market is down primarily due to the whole concept of good news is bad news. The good news is that we had job numbers. Second, bad news is that now the Fed may have reconsiderations about rate cut in July. So now the chance of a rate cut has pretty much pulled back a little bit in July. Now, many of us still think there will be at least a quarter point, but those who are being a bit more hawkish, or a bit more dovish, that we're thinking they're going to get half a point instead of the quarter point traditional, are pretty much zero now. Still up there, but they don't think there will be a half a point. Now the projections behind this is that we'll have maybe a quarter point, and then they'll wait and kind of see how things go, especially since we're kind of showing that there's jobs or economy isn't doing that bad here in the U.S., that the Fed may do one rate cut and then go. But we could have that in July here, as soon as July is. But again, we'll have to kind of wait and see. We'll get some Fed speak probably later this week or next week, and listen to more what they have to say. See what their thoughts are with the new job numbers that have come out. Also, the investors were kind of watching the U.S. and China, see where we're at with things on that. Nothing's been released as to any specific information, so there's some uncertainty as to when things will be done. It looks like we're supposed to be sending some contingency over to China next week for negotiations, but again, we haven't heard anything further other than they're getting back to the table and speak. So, and no detail has been released. So let's see how this is playing out in the bond market. Bond market's not doing too well today, but I think it's going to be more of a personal or more sentimental thing, and we'll rebound. But as you can see down here, we were testing the 25-day moving average. We were down well over 30 basis points. Right now we're down about 27 basis points, and just hanging at the line here of this pretty strong was a ceiling resistance, but has been a floor support now. It's been pretty hard to penetrate. So we'll have to kind of wait and see if what side of this line we're going to close on. But as you can see, it has pretty strong sentiments, and we were touching down on the 25-day moving average. On the yields, however, we were at the 25-day moving average. Currently, this is at the 2.03, and we're right about the 2.05, just a hair under 2.05, like 2.046 to be more precise here. And so again, this has been a pretty strong line here. We'll have to see if it is able to close above it or push it below by end of the day today. All right, so what does that mean? That means rates are up a bit for today. We basically, what that translates into, we of course lots of gains we had this past week. However, again, I do think it's just a temporary blip. As you can see, like for example, on the yields here, we have the 25-day moving average. It's only going to add another layer of support to make this more difficult to push upwards. Same thing with the, same thing with the 25-day moving average here moving upwards. It's only going to push it further up and help us out here in the long term here. All right, so that pretty much calls a wrap. Rates are a little bit higher today, but if you guys are looking to refinance, I'm an MLO, which means I'm a loan officer. I work with lender room services all 50 states. CMG is the company, CMG Financial is the company I work with. We are home to the all-in-one loan and home fund it, on top of all the jumbo conventional, Fannie and Freddie, FHA, VA, and USDA. And of course, we have several niche loans. We got investor, we got bank stand, we got foreign national loans. So if I can assist you guys, please DM me. I'd love to be able to help talk to you a little bit about your situation. All right, folks, you guys have a great rest of your day. Thanks so much for watching. Enjoy the weekend, and we'll love to see you guys on Monday. Take care. Bye-bye.